first, let's send it over to Chief Economic Correspondent Steve Leeson for more on Powell's message to the markets. Steve, did Powell give in?
You know, some people are characterizing it that way. I'd say he kind of redirected from a legal standpoint, perhaps. But what he did for...
All right, guys, welcome back to WolfPack Cryptos and MMGinvest. I did just make a video. It took me like 2-3 hours, and there's a copyright claim on it. So I will just make a shorter version of it. First of all, this is not financial advice. Consult your financial advisor. This is more of an educational channel. If you're interested in cryptocurrencies, gold, silver, mining stocks, please visit the links below this video. Alright, so this is the chat room of MMGinvest, the new chat room for economics and metals. So Jerome Powell, the FOMC meeting minutes, it's the Federal Reserve announcement, like conference, where they tell the markets and the world what they're doing, sorta. Alan Greenspan coined the term Fed speak, which means you talk in a way that is really complicated, confusing, and it's really hard to figure out what you're saying. And Ben Bernanke used to do that. So did what's her name, the previous Fed chairman. It'll come back to me in a second. Anyways, Jerome Powell, the new Fed chairman, who started a year ago and replaced, what is her name? It'll come back to me. But what happened was he became dovish. Hawkish means you're raising interest rates. Dovish means you're lowering them. And you're accommodating the markets, meaning you're money printing, essentially. There's two forms of money printing. There is you lower interest rates and it creates more money into the economy through fractional reserve lending, or you just print money, and that's called QE and monetizing, right? So a little backdrop, a little history. 1971, Nixon took us off the gold standard because France was raiding the Federal Reserve's gold depository through literally wanting their gold back and selling dollars for gold. So Nixon had to put us on the gold standard and the petrodollar. Ever since then, after that, in the 80s, late 80s or late 70s, early 80s, inflation reared its ugly head. There was gas shortages, and inflation was really bad in the United States. And the Fed chairman at the time, Paul Volcker, he had to raise interest rates massively, which was extremely painful for anyone who was borrowing or lending money. By the way, the last federal chairman was, wow, I just forgot her name again. It came to my mind. Janet Yellen. All right. Anyways, and then we had Alan Greenspan, early 90s, early 2000s. He was, everyone loved him because he kept lowering interest rates, kept blowing bubbles. After a NASDAQ bubble, dot-com bubble, he lowered interest rates, and it really created the housing bubble, which imploded in 2008. And then Ben Bernanke came on board, and he saved the markets by, well, they did start raising rates, and I've made a video on this. You could easily find it on the MMGinvest YouTube channel. Ben Bernanke then saved the markets by lowering interest rates to near zero, which has never been done before, and then started quantitative easing, 1, 2, and 3, like $4.5 trillion just printed out of thin air and pumped into the markets. Now, you guys have to understand a few things. whenever they lower interest rates, it causes bubbles. It causes asset bubbles. And the reason is because the banks could lend out easy money. They get the money first. They only need about 10% on deposit. So whenever you take out, let's say you take out a $100,000 loan for a home, they only need $10,000 in the bank to lend you $100,000. So $90,000 was just created into the economy. That $90,000 is then paid back with interest by you. So you have to find that money. The problem is once they raise the interest rates and they're pulling money back in, well, where is the money going to come from for all the loans that were created if they're not printing money? So what happens is the money supply shrinks massively. And what that does is it creates depressions and recessions. And but this time around, it's not going to be different, but it is going to be different in the outcome from 2008. So right before Janet Yellen left, she started raising rates. The very last month, December of, I think, 2015, she started raising rates. The stock market didn't like that. It started falling, but then started recovering as Trump came on the scene. So back here, this is when the Fed started first rate hike since 2007. Yeah, it was the last month of 2015. And then the market started recovering once they raised rates because Janet Yellen, she was raising rates every couple quarters, just 0.25 basis points, which wasn't enough to really affect the markets too much. Gradual rate hikes. And then Trump came on board, and then we went into a massive bull market, Trump euphoria, which caused even more malinvestment and bubble blowing. And the markets did not correct or fall because of all the rate hikes, because they've been raising rates ever since the beginning of 2016 during the Trump presidency. And it hasn't really affected the markets too much until 2018, this volatility right here. And if you listen to the FOMC speech, he gave a couple. For one, he said that basically there are no bubbles, nothing that they could see right now. They did bank stress tests, which came out to be fine, but the problem is the stress tests do not account for any possibility of inflation, massive inflation, or bonds selling off. And bonds have been in a bull market for 4 decades, and that's going to change soon, very soon, according to the technical analysis, and just the fact that bonds cannot go up forever. It just can't. All right, guys. Interest, the yield on interest, they also have to go back up. For decades now, they have been artificially suppressed and lowered by the central bank. Since this is interest rates on the 10-year, since 1981, right? So this was Paul Volcker right here. And then to stop inflation. And ever since, we've been at a bubble party, money printing, artificially low interest rates, money bubble party. And it's bottoming out now, and the only way it's going to go is back up. And when that happens, the market's going to force interest rates higher, and then the bonds and the stock market's going to implode. And the Fed knows that, but they're buying more time. I don't know if it's political or not, but Trump has made it political because he's been tweeting about the Fed raising interest rates his entire presidency, which is it's threatening the economic growth, right? Now, is there real economic growth since Trump became president? In my opinion, not really. It's just it's euphoric, right? People think Trump's going to fix everything, so they're buying more things, they're taking on more debt, businesses are hiring people, and it's all like misallocation of assets and capital and money. So, in a nutshell, Trump actually, during his run for the presidency, actually made a mistake during an interview and said he'll default on the debt. So I posted this video in the chat group of MMGinvest. You guys could listen to it because the MSM came down on him because of that. Now, then he walked it back, like, oh, we're not going to default on the debt. What we could actually do is just print more money, and the video is linked in here in the chat room. I can't share it because I'll get a copyright. Also, another thing most people don't know, Trump, as soon as he moved into the Oval Office, he put up a portrait of Andrew Jackson, which was one of the only U.S. presidents who actually got rid of the Federal Reserve back in like 1888. All right. And Trump, one could argue, is trying to buy more time to bring back jobs, to bring back manufacturing, to win this tariff war. That tariff wars nobody wins. And that's his game plan. And then he's probably going to default on the debt. Or print the dollar out of existence and then just go back to a gold standard. And Trump loves gold. Or you could argue maybe gold and crypto or Bitcoin. I don't know. We'll see, because the world, and it all depends on what China does and other countries, nation states. Will they adopt Bitcoin as a standard and gold? Because all central banks around the world have been buying gold secretly for like the past 10 years, since 2008. All right. So this Fed decision, I posted some thoughts and opinions, but he's dovish. Dovish means he's gonna start not raising rates, and the Fed is capitulating, meaning it's good for the markets, for equities, it's good for gold, and it's bad for the dollar. And you can see here that the dollar is it had a nice run, a nice rally for the past few years here. This is a monthly chart. But it looks like it's going to roll over and start going back down. Let's go to the weekly chart. And yeah, the dollar ever since the first rate hike has been in a bull market. But if the Fed starts capitulating and going dovish and no more rate hikes, it's going to start rolling over and the dollar is going to start losing its value. Recently, Trump has given us another tax cut by making deals with Saudis and OPEC, right? So they're pumping the U.S. with oil, and if you've noticed at the pumps, the prices are cheaper, and this is just temporary. It's just going to buy time. Yeah, so I'm assuming that the market's going to try to push interest rates higher, but temporarily they might fall back down below 3% on the 10-year. Gold is holding on. And gold is starting to smell the weakness, the blood in the water, and it's gonna break out in 2019, especially if the Fed capitulates and they stop raising rates, because that signals to the market that they might see weakness in the economy, which is exactly what it is. But really, the weakness in the real economy is never left. The only thing is they're trying to prop up the markets because they see that it might crash. And I was expecting it to trade sideways in the symmetric triangle and then eventually break down, and the top to be in on the S&P 500 here, and this is a weekly chart. And you guys have to understand, the Federal Reserve, if you listen to the meeting, I wish I could share it, but I can't. He was saying all kinds of, things I don't agree with, lies. And the way they talk, they were blaming it pretty much on the free market, the volatility and the markets. Really, they are the ones who cause the business cycle, and they're the ones who blow bubbles. If there was a truly free market, which we have never had, bubbles would happen, but they would never get so big. and they would crash quickly, and the only people who would get hurt are the people who fell for it, right? You want to get rich quick, and the malinvestment, and the companies who are supposed to go bankrupt will, and we would have like recessions, and they would last for like 6 months to a year, literally. And we would have bubbles that maybe last a few years. It would be nothing big, and then the economy would smoothly sail. But the problem is we also have the federal government who keeps raising taxes and regulations, which creates a non-competitive nation, and it destroys productivity and entrepreneurial growth, small business growth, and whatnot. It's really the government that destroys it, and the central bank by printing money, so Wall Street and these monopoly corporations can keep growing bigger and bigger and destroying their small businesses and competitors, which is really socialism, and if you look at it. So, well, what the Fed is doing right now is they're trying to prop up the markets and their banks. And you have to know that the Federal Reserve is private. It's owned by all the other banks. Another thing he said in this speech was he was blaming it on the banks, the Great Depression, which is ironic because who owns the Federal Reserve? Who are all the chairmen and the board? It's the banks. It's the banks. So, no, the policy of the Fed is to not let inflation get out of control, and they say it's jobs, but it's not really jobs because they can't make jobs. The only thing they could do is make more money or make less of it. All right, so it's so ironic. He blames it on the free market and the banks, but the banks own the Fed. So if you listen to that speech, I will post it in MMGinvest and the WolfPack Cryptos newsroom. All right, guys. So the Fed has gone dovish. What does that mean for the markets? It's probably going to buy us more time. Can it actually break out higher? If Trump actually gets a crazy good deal and wins the trade war, then yes, the stock market could go to all-time highs again, which is fine with me. It buys more time to speculate with cryptos, and but you could actually see metals go higher with the markets, because what could happen is the stock market equities could go higher and higher, and the dollar could sell off meantime. And while that happens, which actually means you could see a bull market in metals, and equities trade sideways or slightly higher. We'll see. And I'll keep you guys updated on that. If you guys enjoyed this video, thumbs up, share it, and check out the links below, and check out WolfPack Cryptos Telegram group and MMGinvest Telegram group. They're free. There's a free news room where I keep you guys updated with news and charts of Bitcoin and my thoughts. And then there's a private membership. You go to wolfpackcryptos.io for altcoin research, which is very good. And yeah, and it's definitely worth what you pay. So, and you learn how to trade because I share my altcoin trades. And recently, I mean, we bought that dip. I'm sitting at like a 70% return on investment from just like a day and a half ago. All right, guys, until next time.